NFRA has identified serious audit failures under SCA 260 and SCA 265. This video explains common non-compliance by few of the audits and key governance risks. So we are discussing one of the most critical parts of the NFRA circular dated 7th January 2026. Common non-compliance under SCA 260 and SCA 260. These are all real failures identified by NFRA during investigations into professional misconduct. Let us understand each of these failures in a structured and in a practical way. NFRA observed that properly communicating with the TCWG, those charged with governance, that is a full form of TCWG. Documentation is weak. Critical matters are not reported. These are all serious violations impacting corporate governance and investor confidence. TCWG. Incorrectly identified TCWG. Instead of board of directors, it was considered only audit committee, sometimes even management. So this is a direct violation of SCA 260. TCW governance level, not management. Another issue identified, poor communication, poor documentation. This is our second major issue. Communication was incomplete and poorly documented. Failed to communicate audit scope and timing, materiality, key audit matters, major risk like issues. So relied only on engagement letters, another issue, which is not sufficient compliance. No two-way communication. This is a third failure. No proper two-way communication. Did not define communication process, documented discussions, and capture responses from TCWG. Decisions, fraud suspicions, management integrity. So this defeats the purpose of SCA 260. And last minute presentations, another serious issue. Communication was done just, so only presentations were given with no detailed discussion or documentation. This is not meaningful communication. Another issue, confusing management with the TCWG. This is the basic mistake. They treat TCWG. This is incorrect. TCWG is equal to board governance level. Non-communication of unusual transactions. NFRA found that failed to report unusual transactions, loans and advances, related party dealings, promoter group transactions. These are all high risk areas and must be communicated, not reported. These are another issue. This is another issue. This is a major lapse. Violations of laws and regulations were not reported to TCWG. This includes regulatory breaches, compliance failures. This can impact company's license to operate issue. NFRA observed not reported issues in related party transactions. Such cases like increase in transactions, not at arm's length basis, not in ordinary course of business. Final and most serious non-compliance, internal control weaknesses. It was not risk management committee not functioning. This is violation of SCA 265. So these findings clearly shows audit is not just checking numbers. It is about communication, governance, and accountability. NFRA has sent a strong message. Weak documentation is failure. So proper communication with TCWG is mandatory. Thank you.